Hey everyone, and welcome back to another video for today. So first of all, I'm back. Well, not 100% back, but partially back. This is the ghost of Bruno Fernandez. This is the ghost of Couch Investor at the moment talking. I really appreciate all of the nice comments, thoughts, prayers, everything that you've all left in the comment sections over the last couple of days. I'll be honest, I've never been this sick in my life, so it will take time for me to come back and put out a lot of content for you guys, but I thought, hey, Google reported, so let me make here an extra effort. I might go live with Jose later today to talk about Intel's earnings, so that will be later today. Well, of course, we're going to talk about other stuff as well. You'll see whether or not that stream is scheduled later in the day. But we have to talk about Alphabet, right? We have to talk about Google because this was yet another very good report, good commentary on the earnings call as well. Stock is up 3.3% at the time of making this video. We're making our way back to $200. Gene Munster is probably grabbing his hair. That's a joke. He has no hair. So yeah. Anyways, let's talk about this report. Let's talk about all the data that was given to us, and especially two important metrics here, which we'll talk about that in this video. If you enjoy this type of video, of course, hit all the buttons. Don't even have to tell you anymore what to do. If you want to support me even further, do check out the link down in the description and in the pinned comment, really top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And of course, a special thanks to fiscal.ai, previously FinChat, for sponsoring this video. So, by the way, for those that don't know, every time one of the most popular, most of the companies do report earnings, 30 minutes, an hour later, you would be finding most of the results, most of the key performance indicators already on fiscal.ai. You will be finding the transcript right after the earnings call is over, right on the website. You can try it out. Of course, there's a link down in the description. You get 15% off, and new users will get 2 weeks of Fiscal Pro for free. So do check it out. Now, as you can see, as you've probably seen, this is a business, right? The search business that for some reason people thought this was a dying business. But as we can see, this business has grown 11.7% year over year. Might not be 20%, but it's a business that generates $54.1 billion a quarter. Not only that, it is accelerating, right? Last quarter, or now 2 quarters ago, that increased 9.8%. Now 11.7%. Pretty good, no? Pretty good. Yes, I know. I do have to admit that. So overall, the business did accelerate. It was up 14% year over year, reaching $96.4 billion. You get this in the AI summary here when you click on transcript if you don't want to read all of the transcript, or you can just watch the video and I'll summarize everything you need to know. Google Services revenue increased 12% to $82.5 billion. Google Cloud, 32% year-over-year growth to $13.6 billion. Operating income increased 14% and operating margin was 32.4%. Google Cloud's annualized revenue run rate is now more than $50 billion. Now, if we continue to see Google Cloud growing, let's say 30% each and every year, in 3 years' time, this is going to be a $100 billion business for them annually. In just 3 years' time. Just keep that in mind for all of the people that still only talk about Google search. Yes, Google search, of course. Of course, Google search is a $200 billion business for Google annually right now. But Google search is not growing 30%. Google Cloud is growing 30%. Now, one of the big reasons why the stock initially went down 1%, 1.3% or so, was because of the big miss for free cash flow and the increase in CapEx. So let's actually ask here fiscal.ai the question, right? Why did CapEx increase in 2025 and will it increase in 2026? So the reasons for CapEx to increase in 2025 is as follows. It's the strong demand for Google Cloud products and services. The company now expects to invest approximately $85 billion in CapEx, up from $75 billion. This updated outlook reflects additional investment in servers, the timing of delivery of servers, and an acceleration in the pace of data center constructions, primarily to meet cloud customer demand. Sundar Pichai, the CEO, also mentioned that the comprehensiveness of their AI portfolio and the breadth of their offerings are driving demand, necessitating increased investment to expand capacity. The company is experiencing a tight supply environment, and the increase in capex is aimed at addressing that constraint. Remember, last quarter they told us we are supply constrained, not demand constraint, supply constraint, which means if they had more supply, they would have been growing much faster. So this makes a lot of sense, right? This is a company that is investing in the future. It's not focusing on short-term profitability, right? We've seen that with Amazon, for example. No, it's focused on long-term profitability. That's why Amazon AWS, right now is already over $100 billion business for them with over close to 40% operating margins. Pretty good, right? We'll talk about all of that for Google Cloud. Moving on to 2026, the transcript indicates an expectation of a further increase in capex. This is attributed to the continued strong demand from customers and the growth opportunities across the company. While specific details regarding the magnitude of the 2026 guidance increase were not provided during this call, the CFO stated that more details would be shared on future earnings calls. So yes, the $85 billion will increase in 2026. Now, for those that remember, these were my catalysts that I mentioned a week, 2 weeks or so ago. Google Catalyst, earnings report, cloud growth, Gemini usage, search query growth, then the narrative shift, which I think is happening right now. Now, if we look at Google Cloud growth, you can see that for, of course, the last couple of quarters, we've seen a little deceleration. But then again, the year-over-year comparisons were a bit more difficult, so that's why we've seen that happen. But now we're seeing an acceleration despite the year-over-year comparison becoming a bit more difficult. Of course, the next quarter is going to be an interesting one because then we're lapping that 35% year-over-year growth, which that was, of course, a very, very easy quarter to beat. Then if we look at the margin for a Google Cloud, which again, this you can do this on fiscal.ai, custom metrics, you can look for custom formulas or you can make it yourself. We can see, look at this acceleration here. We went from 17.8% to now 20.7%. Okay, previously, last 12 months, I think we were still at 16.4, 16.5% or so. Now, this is going to increase time and time again. We're going to go into the 20s and then higher and higher and higher. Of course, we still have a long way to go to reach the Azure, although that's intelligent cloud, and the AWS type of margins. But this is already very, very good to see. 20.7%. I was expecting 18s or something like that, but not 20.7. So this is a very, very important metric. And of course, Google Cloud as a percent of overall revenue is increasing more and more. And as that's increasing more and more, margins are becoming more meaningful. So that will become more of a operating income impact as well, which you can see right here. Operating income, $2.82 billion, increasing 141.1% year over year, of course. Pretty easy to grow like this if you're starting from a very small base or if you're starting basically from losses. But then if you look at the last 12 months, look at this flip of the switch right now, last 12 months, generating $9 billion, growing close to 200% year over year. Okay, Google Cloud is a wonderful business that some of the analysts and Wall Street just keeps neglecting for some reason, right? Okay, fine. I mean, good opportunity for us, I guess. Then as for Google Search, as we've seen, great business, $54 billion in revenue, growing 11.7%, better than last quarter. Nothing to say there. Looking at operating income for that quarter, 11.4% growth year over year, $33 billion in operating income. So of course, that's still the majority of the operating income. Then if we look at Google subscription platforms and devices, so all the subscriptions, My Pixel phone, Gemini One, Google One, all of that comes here. That has, again, accelerated. Last quarter, 2 quarters ago, 18.8% year-over-year growth. Now we're closer to 20%. And this is already also a over 43 billion dollar business annually that is growing now close to 20%. Incredible, just incredible. Moving to YouTube, that generated $9.79 billion this quarter. Year-over-year growth also accelerated from last quarter. We've also seen that YouTube Shorts monetization is now on par with the rest of YouTube. That's of course a great sign. And then we've got a Google network that's down 1.2%. This is a business that of course is in the center of that anti-competitive scenario right now, which is why Google doesn't really care. If that business disappears tomorrow, Google doesn't really care. It's not really focusing on that business anymore. Moving on to some details shared during the earnings call, more on Gemini here. So the developer users, they grew from 4.4 million to 9 million in just 6 months. Monthly active users have crossed 450 million. That's up from 400 million just a couple of weeks ago. User engagement grew 50% quarter over quarter. Daily usage requests also rose over 50% from the previous quarter. They are processing 980 trillion input tokens per month versus 480 trillion just a couple of months ago. Not a year ago, just a couple of months ago. As for videos created, 70 million videos have been created since May using VO3 and other tools like Flow. That's their AI filmmaking product. Lots of integration with YouTube here as well. Then with Google Vids, yes, that's also a product. Monthly active users have crossed 1 million, and AI mode has reached 100 million monthly active users in the United States and India. That's the only 2 countries where this is available right now. Yes, of course, if you really want, you can just use a VPN and try it out. Moving on to AI overviews, they've seen 2 billion monthly active users, up from 1.5 billion just a quarter ago, and that's across 200 countries and territories and 40 languages. AI overviews is driving 10% more queries globally. They've seen 70% year-over-year lens growth, and circle to search adoption has been incremental. And that's the thing, right? That's the thing. Imagine you have the traditional search, right? The traditional search is just that one line here. Then ChatGPT came in, basically took that line and stretched it into one direction. It didn't cut that line. It basically added a branch to that tree. Same thing happens here with AI overviews. It's adding a branch to that tree. Same thing here with Google Lens and circle to search. AI mode is just another way of using search. So you're expanding the search market. You're not taking, per se, market share. In some cases, yes. But I believe, and I think a lot of people would agree, that since ChatGPT came out, since this, let's say, conversational search came out, it's expanding search, which is why we're seeing that AI overviews driving 10% more queries globally. These are things that in the past you would not have searched on Google, right? Today, I am going on Google and I write full-on sentences. This is something that previously we didn't do, right? Previously, we wrote a word or 2 words or maybe 3 words, and that's about it. Today, it's full-on sentences. And yes, I also use Google Lens and I also use circle to search. So new ways of searching. You are expanding. You're not cutting. Then talking a little bit more on the clicks versus monetization, advertising side of all of this. So AI overviews are exceptional at efficiently matching users to interesting links more accurately and quickly than traditional search, leading to less needs for multiple clicks. Now, while traditional click growth may slow due to efficiency, more targeted links are innately more valuable, leading to strong pricing growth. We've also heard this from Meta, for example. It's all about making sure that the use of AI here increases your return on investment. As for YouTube search, as I said, it's now on level with the rest of YouTube. They've seen 200 million shorts watched daily. So for those of you watching, I know which one you're watching. YouTube has 12.8% of the streaming market, and that's up 9.9% year over year. As for cloud, the 250 million deals have doubled year over year. As for the $1 million deals signed in the first half of 2025, that already surpassed the whole of 2024. Again, here showing the strength and the momentum that Google Cloud has. Customers are up 28% quarter over quarter. They've added customers like LVMH and Salesforce and plenty of others as well. And the backlog is up 38% year over year. Of course, signs of good things to come in the future. And so right now, as you can see, we are beautifully making our way back up to all-time highs, right? Slowly but surely, we are going to reach all-time highs. Stock is not even going to be overbought, in my opinion, but just naturally going to go to where this company belongs, which in my opinion, this company belongs in the $3 trillion club, maybe even the 4-1 as well, because it's just a beautiful business to own that is, yes, very, very well run. I was a big critic of Sundar a year ago. I think he heard all of the criticism, did change a little bit, took some time, but I think since the start of this year, I think the company has done tremendously well. And so that would be it for me in this video. Happy to be partially back. I still think this is a cheap name to buy. Am I going to buy? If we see some weakness in the stock in the coming days because of the overall market, I don't see why not. I think this is a market beater for many, many years to come. Risk reward wise, I mean, reward is pretty big. It's not going to be a 10x or something. But if you want to really own an incredible business at a very good price, I think this is one of those names where you cannot go wrong. So that's about it for me in this video. Thank you all for the support. Thanks for watching. Do check out fiscal.ai down in the description and in the pinned comment. And I'll see you all hopefully later, if not tomorrow. Bye-bye.